Good morning, everyone. This is our training on prepaid expenses. I am going to do a PowerPoint for this one. I'm not going to actually go through the reporting package because it's pretty simple as far as the actual forms go. But I'm going to spend a lot of time going through more of the theory behind prepaid expenses and some of our policies for it, because they can be a little complicated. So paid expenses are expenditures for goods or services that were paid for in advance of the corresponding usage period. Example of this is an agency purchased a 2-year insurance policy on January 1st, 2024. The date of the purchase, the entire amount paid is a prepaid expense. That prepaid expense balance decreases throughout the policy period until the policy ends on December 31st, 2025, at which point the prepaid expense balance is zero. Prepaid expenses are assets that are reported on the statement of net position or the balance sheet, depending on what kind of statement we're talking about. For state agencies, you guys, you're functioning on a cash basis throughout the fiscal year, so you're not recording a prepaid expense at that time. The whole point of this reporting package is at the end of the year, we can convert your cash activity to an accrual basis. So yes, good for that. So even though you're only doing this at the end of the fiscal year, you kind of have to be doing things throughout the fiscal year to make sure what you report at the end is accurate, especially if you have a lot of these types of expenses. So you should be using some method to track your prepaid expenses throughout the fiscal year. One way of doing this that's the most common is when you're processing the invoices and skis, you add prepaid or prepaid with a hyphen in between, or some other variation of that in the header text field and or the item text field in skis. And by doing that, we can pull a report that shows you all the transactions that have those tags on them. So after the fiscal year end, we send out 2 different business warehouse reports. One that's prepaid expenses, one that's prepaid expenses item text. The first one captures all the ones that have those prepaid tags in the header text. And the second one picks up the ones that are in the item text. These reports are only a starting point. You have to review your internal records and or invoices to determine what amount should be reported on the package and how you should be classifying those amounts as far as expense, current or non-current. You should also be aware that some agencies will use both of those fields. So you could have things that are showing on both reports or they're only showing on one report. So you got to be careful and make sure that you're capturing everything and you're not double counting anything. In some agencies, they'll put prepaid and they'll put a date range after it or prepaid expense. All of that's fine as long as you have that prepaid or the prepaid with the hyphen included. It'll get picked up on those reports. These reports are usually sent out in August. And for this year, they'll be sent out on August 2nd. In addition to that, some agencies will also track their prepaid expenses in a spreadsheet throughout the year. Some agencies will do both. Some agencies will only use the spreadsheet. And some agencies, I think, might only use the skis reports. All of it's fine if you get an accurate end result, but I do think it's probably safest and most accurate if you're kind of using both, especially if you're a larger agency or you're a decentralized agency. So once you get to year end, what should you be reporting? Expenditures for goods or services that were paid for in the current fiscal year, whose usage period extends beyond June 30th of the current fiscal year. So all of those except any payments you make in advance for debt, lease assets capitalized in accordance with GASB 87, or submittas capitalized in accordance with GASB 96. So as an example, you have a GASB 87 lease with annual payments that are normally due in July, and your agency decides to pay it early in June, you would not report that on this package. And this is because you already have a lease asset that's on the books and is depreciating over time. So if we did that, we have two assets. We don't want to double count an asset here. Another example, if you have a loan with annual payments and you decide to pay it off early by making the last 5 payments in June, you would also not report this because it relates to a prepayment, which sounds similar to prepaid, but that's just paying a bill in advance. Should not be confused with a prepaid expense. You don't report prepaid expenses for any kind of prepayment of debt financing. So hopefully that makes sense to everyone. Complicate this a little more. If you have any lease or software agreement payments you make in advance that are not capitalized, you should include those. And that's just because you don't have any asset booked, and those are just normal expenses. So if you prepay them, then it's just a normal prepaid expense. And finally, if you have any payments that would qualify as a prepaid expense otherwise that you make to private entities or other state agencies, those are included in the package. I've had some people ask if they should be including payments to other state agencies, and the answer is yes. And there's actually something new on the package this year about that, but I'll get to that in a little bit. This is something I realized last year a lot of people are not aware of. If you've reported things as non-current in prior years, either last year or any year in the past where it's extending several years, you have to roll it forward every year until it's no longer prepaid expense. I got kind of a complicated example to illustrate this. But if you have an agency that prepaid a 5-year service contract on January 1st of 2022, which would be in FY22, it costs $500,000, and it's for the period of January 1st, 2022 through December 31st, 2026. This is how the agency would report this on each package for each year. So this would be $100,000 a year for each year of the contract. FY22, you'd have $50,000 that goes in the expense column of the package, because you've used that from January through June. And then you have $100,000 as current, which would be what you're going to expense the following year in FY23. And then $350,000 that's going to be expensed over the next 4 fiscal years. And I won't go through every single year here, but FY26, you have just $50,000 left of prepaid to report. So in FY27, and I'll get to this a little more in a second, but you could report the $50,000 as expensed, or you could elect to just not report that anymore because there's no prepaid balance associated with it anymore. All right, I'm gonna keep going. Okay, so that's what you should report. What can you elect not to report? First, these all 3 of these are optional, by the way. And one of these was kind of written in the past as it was required, and I have changed that. I don't think it's wrong to report it that way. So, you could elect to just report everything you want and just ignore this part, or you can listen to it and see if there's some things that could maybe save you some time. So kind of like what I just mentioned, if you have a prepaid that you've reported in prior years, or maybe you paid it at some point in the year and they tagged it as prepaid expense at the time, but it was still fully expensed before the year ended, you could elect not to report that on the package, because I don't necessarily need to see things that are just expensed. If it's easier for you to track things to report it, that's also fine. And if it would make you feel more comfortable with your auditors, that's also fine. No right or wrong there. Agencies can also exclude prepaid items individually under 10,000, and that's current and non-current, and up to 100,000 in aggregate. So you can report any items that are individually 10,000 or more, and if necessary, smaller items, so that total amount excluded does not exceed 100,000. Example of this, you have an agency that has 12 prepaid items that are $9,000 each, and one prepaid item that is 5,000. So the total is 113,000 for all their prepaids. The agency elects to report one of the $9,000 items and the $5,000 item, and they exclude the rest. So they report 14,000 total and exclude 99,000. All of that would be fine and acceptable based on this policy we've written. Now, a lot of agencies elect not to deal with this at all because it can be more time consuming trying to figure this out versus just reporting everything. It's really up to you. To me, it seems like it makes the most sense just if you don't have a lot, and it could potentially get you out of submitting the package at all. But otherwise, it's probably just easier to report everything. Last one, agencies may exclude a prepaid expense of 12 months of expenditures already been recorded in the current fiscal year for recurring items that have been in existence in prior years. And this is the one that I think was written in the past more as you got to do this. So the key thing with this is the recurring items that have been in existence. This is really more for things that are, monthly utility bills, phone bills, that kind of stuff. If you have anything that isn't monthly, I would avoid I would recommend avoiding not messing with it. You can if you want, but to keep things cleaner, it's probably a good rule of thumb to just use this for monthly payments. But you could do it for something that's paid quarterly or something like that. So an example of this, an agency pays a water bill for July 2024 and June 2024. The agency has already paid 12 months of water bills for this water account during the fiscal year. So they've already paid July 2023 through June 2024. The agency can elect to exclude the July 2024 water bill. Now let's change this example a little and say that everything is the same, but the agency only had 11 months of water bills for this water account during the fiscal year. So August of 2023 through June 2024. In that instance, they cannot elect to do that because they don't already have 12 months of expenses booked. And they probably have the same situation where the prior year they paid the July one early. Another thing to keep in mind with this is you should use this per service account. So if you're an agency that has 100 different water accounts, you can't go and say, oh, I had this many for this one and this many for this one. It needs to be per account. The actual reporting package, I still put a snippet in here because this is pretty much it. there's instructions and our viewer's checklist and the signature sheet, like all our packages. But, you know, it's one basic form. This package is going to be due in August. This year it's August 16th. So fund number, you know what that is, but just make sure you put the full fund number or you'll get an error message. Same thing for the GL account number. Agency code is new for this year. I'll come back to that in a second. These three categories, you have expense in FY24. This relates to the portions of prepaid expenses that were actually incurred during the fiscal year. The current column is the prepaid expense amount that will be incurred in the next fiscal year. So next year would be FY25. And the non-current FY26 and after are prepaid amounts that relate to expenses that will be incurred beyond the next fiscal year. And for this one, they'll be FY26 and after. There are links on the package to each of these terms in case you get confused. I've had some people, they get kind of hung up on the expense part, especially if you're just really used to dealing on a cash basis. Some of this can be a little foreign. Well, I'm going to do a quick example. We have a $20,000 item that was paid on May 2024 for services provided for the period of May 1st, 2024 through August of 2025. So 16 months. That means the contract would be $1,250 per month. So for the expense column, you'd report $2,500, which would be the 2 months for May and June. Current column, you'd put $15,000 for that next fiscal year period. And then your last one, your non-current, you'd have the $2,500 for the 2 months of July and August of 2026. And keep in mind that this would be an example of one that you're going to have to roll forward and report again the next fiscal year. I can't stress enough, please roll forward the amounts. This is very helpful to us. We can't, you know, the way this is reported, I have no idea when your non-currents roll off. So I have to trust you guys to give me that information. If I have any indication that you've left off some non-current amounts, I will be contacting you about it, and your package might not be accepted until that's corrected. So please just do it the first time and we'll save all ourselves some time. This new column, I also put something up here about that and tried to make it clear on the package. So hopefully that roll forward issue is not as much of an issue going forward. This agency code that I added, I also actually added this on the unearned revenue reporting package, which not a lot of people do, but it's very similar to this package. You have any payments you're making to another state agency, you're going to have to report that on its own line. So let's say you had one that it had the same GL account and fund number as some other prepaid expenses, but some of it was paid to another state agency. You'd still have to come down and report that on its own line. Now, if you had multiple to the same state agency, you could still aggregate those on one line. But if you had aggregates that it's two different state agencies, but it's the same fund and GL account, again, those would need to be two separate lines so I can see the two different agency codes. And this is just going to help me. We do some elimination activity at the ACFR level, and I need to be able to see that so I can tell if it needs to be eliminated at some levels of the ACFR, not all levels. Does anyone have any questions? Here's my contact information. If you have any questions later after this, especially as you're doing the package, please do not hesitate to call me. I am more than happy to help, especially if it helps get the package right and we prevent any errors.